Now today we are going to talk about candle wicks and shadows. You can call them candle wicks or shadows. Okay, what is a candle wick? I want to cover candle wicks and demand and supply in this very video. I want to combine two in one video such that you can move faster. Okay, so watch attentively and you can repeat the video if you have not understood. What is a candle wick? A candle wick. A candle wick, you can write here candle wick. Candle wicks or shadows. Wicks or shadows. Wicks or shadows. A wick, this helps to show the market is rejection points. So when a candle opens like this, assuming we have our candle here, a green candle, when it opens like this and it will open and go down like this, then if they reject that market from that downtrend, it will go up and they will, maybe now the buyers have more momentum, so the market will go to the uptrend like this. When it goes to the uptrend, it will leave a wick in this place. It will leave a wick from here. It will leave a wick like this. You get? Trying to show you that this market, though the market went up, but it has already traded into these places. Okay, it shows that the market has already traded from these down places, so it will leave there a wick. It will grow like this, then to leave a wick, then it forms the perfect candlestick. You get? So take close attention to this. Take close attention to this. Okay, if this market opens like this, if it opens like this, it will open from here and it goes up, then it comes back down like this, then trades in the down parts. This will be a ready candle because it has traded from, its open price is on the upper side of the candle, so it has fallen down. So this candle will leave a wick, a ready wick on the top of it. Hope you're getting me. It will open like this. The ready candle to make a wick, it will open like this. It goes down like it will first go up like this, then it's rejected and it will come back like this. Okay, so on this upper side, it will leave there a wick, an indication that shows that this market was on an uptrend, but on the way it was rejected. You're getting me? It opened as a bullish candle. We sometimes call it manipulation, but it opens as a bullish candle, but after being rejected, it will turn to red. Hope you're getting me. So when the market is rejected from a trend, it will leave there weak. That is an indication that the market is being rejected from that side. Okay, so let me explain to you now demand and supply. I'll draw for us our lines here. Let's have our line here and another line here. Okay, down here we will name this part we will name it, this part will name it the demand zone. Demand demand zone. Okay, and up here it will be the supply zone. Supply zone. We have the demand zone. We have the demand zone here. Have the demand zone and the supply zone. Okay, let me hope you're getting me. Are you getting me? We have the demand and supply zone. So in the demand zone we buy. You get? In demand zones we buy. Down here we buy. We buy. Here we buy. Or in other words, in crypto market we call it long. We long the market. Long or buy. In forex it's a buy. Or buy. Here we'll buy. We long or buy the market. Okay, we long or buy the market. But on the supply zone, these supply zones will not buy, we will short. We short the market or sell. Okay, what do I mean? When you sell, when you buy, you have to wait for the market to go up, to rise, and then you do what? Then you sell. So we buy and sell. So we buy from here, and sell what we have bought from here. So assuming you have bought here, let's call it like 1 kg of sugar at 2,000. When it goes up like this and reaches this line, it has made profits. So it will no longer be costing it won't be costing 2,000. It will now become like 4,000 or 5,000. So here you sell it because it's already on a very good price. You sell and it goes down, it gives you more profits. Hope you're getting me. So we buy from here, we sell from here what we have bought. Are you getting me? So when this market moves from here, it will move from here, it will move from here, and it can go like this. It can make even one retracement here, and it goes directly to this point, and then it starts retracing from here. It starts making these ranging moves. It ranges from here. It's not, sorry, it ranges from here. Let me draw it again. It will open from here. It can even go straight without retracing, but when it reaches this sell place, it will start making these retracements. You're getting me? It will range. It will start ranging. Sorry, this cursor is disturbing me. It will come to this point, then it starts ranging like this. It starts ranging, making the sideways move, and again it can again break through and go up like this. It can even break and go up like this. It comes back, goes. Oh, it can come, it goes up like this. Or it can come like this. It can open from here, or it can open from here. It goes like this. It starts ranging from here. It ranges. It's not breaking, but makes here a consolidation, or what we call a sideways trend. Then it breaks here and comes back like this. It goes down. Are you getting me? Are you getting what I'm telling you? So there are reasons why this market move in this form. I'm going to explain these reasons in the next video, and I'm going to teach you how you can spot these market trends and know which side is the market taking. Okay, in the next video I'm going to teach you about this. When you see a market reacting in this way, just know it's going to do like this, or it's going to do anything it goes to do. I'll be teaching you, and you all see it and understand it.